Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. We are just under 20 minutes away from the market open as we look to begin the second trading day of 2025. And joining me now with more to talk about the market outlook is Ghabour. He's managing partner and co-founder of Key Advisors Group. Eddie, Happy New Year to you. Thank you so much for joining. And stocks just kind of muted as we start this new year. What do you make of the market action?
So I think this next week or two is going to be really telling is if this is the start of a bigger correction or if this is just a little bit of a market volatility and then we're going to go back to new highs. Right now we are leaning towards new highs, but only in the areas of strength. One thing that investors probably have noticed is being diversified in a broad basket has not really worked here recently. There are lots of areas that have been hit really hard, like housing and healthcare and consumer staples and real estate. So for us, we've stayed very concentrated in areas of strength, meaning we're not diversified across the board, as crazy as that may sound for some investors, but that's because it's a very narrow market. And I think that it's going to stay that way here over the next few weeks. But we would like to see it broaden out in order for us to stay really bullish here going into this first quarter.
Where do you want to see the broadening out particularly, Eddie?
Well, we would like to see areas that are economically sensitive start to bounce back. You know, you look at names like Caterpillar and other areas, they've really taken a big hit, and that's a little concerning because the markets are always forward-looking, as we know. So, you know, it makes us question whether or not these dark clouds that we're worried about are actually closer than what we think. We're still bullish heading into January. We're still long going into January, but we've told clients we will be quick to pivot. And we do think there will be a time to pivot this year. We just don't think it's right now. But we could be wrong. And if these things don't start to bounce, it will lead into other areas like mega cap tech really selling off. And if mega cap tech starts to sell off, that's going to be a big problem for the broad market.
Of course, it is a major weighting in the major indexes. Eddie, as you rightly point out there, we've seen some choppiness of late, of course, after what's been a very strong 2 years to start this bull market since October of 2022. What could cause you to pivot? What are you watching on your horizon that our viewers should know about?
So the two main things that has us really concerned is the strength of the dollar, number one. That continues to get stronger and stronger. It's because when you look around the globe seems to be in a stagflationary environment where their economy is really slowing, but inflation staying high. And we're one of the strongest economies around the world right now, which is making the dollar get strong. That will ultimately be a headwind if that continues. And the thing that we have the strongest conviction on, unfortunately, is we believe that the Fed has miscalculated inflation. And we think over the next few months, when we get inflation data, it's going to cause the bond market to go higher. So we think inflation is going to reaccelerate, and we think the 10-year is going to go towards 5% and maybe higher. If that does happen, we will have to pivot well before that because the market is not ready for that. And if we do get a scenario like that, you could certainly see the broad market have a 15 to 20% correction. But that would be an amazing buying opportunity. But we want to get ahead of that and de-risk before that happens. But I think it's a matter of time here over the next few months when we see this inflation becoming a problem. The bond market has been giving us signal after signal. And I think it's just a matter of time before it does that. But in the meantime, I think we'll get a reprieve on rates and the dollar, cause the market to go up. But within the next 6 months, I believe we'll probably be de-risking for clients.
Interesting. And is that because you do expect a correction or because you expect perhaps a bear market?
I believe we're going to see a correction. I don't think this is going to be a bear market. I think this is going to be a recalibration to get valuations back to where they need to be when you have a 5% 10-year treasury. Because the good thing this time in this correction is I think we're going to have this correction in a non-recessionary environment. You're seeing small business sentiment really pick up. I think you're going to see M&E activity pick up. But if we get inflation reaccelerating and the Fed having to change course, this market will correct. But correcting in a non-recessionary environment could be a great setup for the next decade. So we do expect a sizable correction if that happens, but we think we'll be buying it back within 6 to 8 months and not having to make any major pivots from there.
Eddie, what sectors in particular do you like at these levels?
So right now, consumer discretionary is one of the strongest areas that we really like. They continue to show strength. The ETF we have is above the 50-day. And look, one of our biggest holdings is NVIDIA still, because we believe NVIDIA holds the keys to everything. It's the most highly owned stock. I think it has the best story from a fundamental perspective, but this market, in our opinion, is going to go where NVIDIA goes. That's not a good thing. However, we recognize that. And if NVIDIA continues to show strength, this market, in our opinion, will stay strong. But if that stock really breaks down, it's going to bleed into other areas, and that will be a big warning sign for us. So NVIDIA and Meta, to us, are two best-of-breed names that we continue to own, and we have bought on dips. And lastly, the QQQ, which is mega cap tech, because, again, you cannot have this bull market continue without the areas that have the biggest weighting continuing to stay strong. So we're going to keep a close eye on those for sure.
Eddie Ghabour joining us remotely in this new year. Eddie's a managing partner and co-founder of Q Advisors Group. Eddie, thank you as always.
Thank you.